Hello traders, we are back for another video. So if you have been struggling to be profitable in forex, in crypto, in trading any kind of asset, but you are still struggling to see money day by day, this video is for you. I'm going to request you one thing. Stick with me at the end so that you understand this trading strategy. What I'm going to say it with you. I always charge this trading strategy almost like $350 for our coaching program, but you as my subscriber, as my viewers, just for Thanksgiving we have hit over than 4k subs and over than 400 views. That's why I decided to give out this strategy, so it can help you grow that small account. It's very easy to understand it and to implement. Just one thing what I have to do after watching this video: start implementing this strategy right and then. Pay so close attention to move with me every single step which I will be taking, so that you don't need to miss. And if you are new here, is your first time to come across with my video, to come across with my channel, go on and hit that subscribe button, so that for the next time I release a new video about trading, so you don't need to miss this information. Hit that subscribe button. Don't hesitate to share to your fellow forex trader, so all of us, we can grow, we can rise. If you always want to succeed, you have to lift others, so all of us, we can grow. Are you getting the point? By the time when we start using this strategy, after learning it, I need you be a disciplined person, because this strategy is working in 99%. So the 1% stop loss will be hit, 99% TP they will be hit. It's having a good risk to reward ratio, but that does not guarantee that stop loss they will not be hit. It does not guarantee that if you implement this strategy and then you go full margin, my account will not blow. It will. So you have to be with discipline. Make sure you use risk money management so that you can grow very well. So let me take you to the charts and I show you what you have to do. In front of our screen we have OTC SPC, that's what we call SP500 or US 500 stock trading pair. So as well, what we have to do, our step number one, when you open your chart, or first and foremost, what you have to do to go directly to daily time frame. When you come on a daily time frame, you can see that the daily now is going down. We don't need to look the bias, we don't need to do anything. What we have to do, just we have to mark this present daily candle. So the best time frame, what to do this, make sure it's morning. It's morning, the day when it have closed and it have opened, and it's morning, not in the noon. Now I'm recording it's noon, but it should be in the morning, starting by the 8 a.m. to 9 p.m. is when you are doing this analysis. Are you getting the point? So what you have to do after wake up in the morning, you are on a daily time frame. I'm going to talk slowly so you can understand. Now we are on a daily time frame. The next step, what we have to do, we have to go to here to the lines and we get our horizontal line. No, it's vertical line. Do you see this line which is moving? We put it here on exactly the day of today. We mark that our day. So after marking that is our day, so what we have to do, we have locked it, the line is not moving anywhere, so that we can keep doing our analysis when the daily time frame line, what we have placed there, is not moving anywhere. The next step right now, we are going directly to minute 15. All right, we are in minute 15. So when we come in minute 15, what do we have here? So when we come to the minute 15, we don't need to look to this area here. This area, we don't need it. Are you getting the point? This area here, we does not need it. Day of yesterday, we don't need it. The only need we need today. We only need day of today. We only need this area, which means when the day closed, it is this line what we have drawn, and then this day today it have opens, and then you can see moving downwards. So we only need today, we don't need yesterday. So if you see that the charts are not clear, what you have to do, you have to drop down to minute 5. Are you getting the point? So now we have go to minute 5. Why? We have to see the price action of today. No matter what of yesterday, but we have to trade the price when the day opens and when the day reached to this time here in the morning. Sorry, if the day reach here at the morning, what do we have here? If we can see very well, what was the time exactly here? You can see it was 7:30. Are you getting the point? You can see here down there when I move, the also time move down where in the black shaded. You can see it was 7:40 in the morning. So it's when you have to wake up and then you start reading the market. Are you getting the point? So when you wake up and start reading the market, what you have to do, there, to read the price action. To read the price action, you move with the structure. What do we have here right now? We can see that the market moved very, very well like this. You can see here we have a break of the structure at around this area. We have market made a low and made a high. Let me do like this. You can see that the market at around this area here, it was moving like this. You can see, let me do like this here. So you can see the market made a high, it made a low, made a high here, and made a low. After making a low, it goes up and then it breaks this structure here. So by which means when the day opens and then the market was moving, going upward. Are you getting the point? It was breaking the structures, going upward. So which means the market was not needing to come back down. There was no need the price to reverse to the downside. Are you getting the point? So you can see that when the market made here a high, it made a low, it made a high. There was no need of it to start coming downward. Are you getting the point? That was not there. It was necessary. Are you getting the point? The market should be not do that. Should be not do that to see that it comes back to the downward. It was supposed to make a high, come and make a low, make a high, come and make a low anywhere here, and then continue making high. But it have failed to do that, which means if the market is making the high highs and high lows, that means that the market, it is on uptrend. But when it failed, start doing this and break this recent low, continue making the low, making the high, making the low, this shows that now the market have changed its direction. It moving from up trend to the downtrend. So we only need this information to understand where the price is moving, because these are the market structures. You can see here we have this structure, and also here down we have this structure, and also this high we have this structure which broke this area here. Are you getting the point? So after that area getting broken, so this down area here was not supposed to be broken. Immediately when the market price came and break this area here and break that area, let me do like this. When the price came and it breaks this area here, which means that now the price action have changed from the buy side to the sell side. Are you getting the point? So now we also start to look for the sell opportunities. Are you getting the point? Why? The price has already told us that now it's time to start going down because we have validated this low. Are you getting the point? This low was supposed to be a support, and when the price come and break this low, which means this support have become a resistance, you can see that after this get broken, now you can see that here we had a very single thing. You can execute here and stop loss above, and then you move to the downwards. Are you getting the point? So if all of that happened, so what you have to do to go to the low time frame on minute 1. Are you getting the point? Before we go to the minute 1, what we have to do to identify the insufficiency. What is the insufficiency? Insufficiency is that to see there is no any space when the market is moving from this area to the downside. There is no any gap. Anywhere we find the gap, that is going to be our POI, or our point of interest, or what we can call that it is a favorable gap. Are you getting the point? So we have to drop to the minute 1 or minute 2. Let us first use minute 2 and we see what is M2 telling us. Are you getting the point? So we are waiting the chart to load like we need here. So now you can see that the price, the market moving well like how we wanted. You see it's making the high lows and high highs. So if we can bring our chart here, our line here to navigate like this, we can see that here we had a low, we had a drop, base drop. Are you getting the point? And from this drop and to this drop, we have a gap which was left without getting filled. But if we can see these candles, this one and this one, this come and fill this one, also this one filled this one, but here we had some gap which was not filled. So which means this is going to be our point of interest. Are you getting the point? Let us change color to be green. So that is going to be our point of interest, and we mark it like that way. Are you getting the point? So this is our favorable gap. We have to wait the market to come that area and then we take the sell. Why are we selling? Because this is our our price action, and the market shows us we have to go downward. So if we can bring here our short entry, we put here, we can use pending orders because you can see the market moved like that, and then in just few minutes it have come back and execute, which means this is our sniper entry. Are you getting the point? We place here our sell limit, stop loss, some pips above, because we are in minute 1. We want to put our price here. We have to exactly increase like this because we are in minute 1. Are you getting the point? So we are going to come back to minute 15. Are you getting the point? Because it is our high time frame. So if we come to minute 15 here, we can adjust our stop loss like this one, like that, and then we target 1, 2, 3. So we can go 1 to 3 or 1 to 4 or 1 to 5, every what you need. You can see the price came very well and hit that take profit. So the only thing what we have to do to read the day present price action. The formula to see, there's something to look in the market when you buy or when you sell. I have shown it to you. It's so simple. What we have to look in the market to come and see the market structures. Market structures are moving like this: high, come low, come high. That is only what you need. Are you getting the point? So whether you're looking at buy, whether you're looking at sell, that is what you have to be looking. So if you see that, what you have to do to mark this area here. And now there are two things what to be happen here. Two things to be happen here. Market to come and respect this area and continue up, or what to come, the market to break this area like that and respect this low here. It can come like this, respect this low here, and then go up. Are you getting the point? If that has not happened, the price will come and break this low here. After breaking that low, it will come respect that area, or respect this area, or respect this area, and then it continue going down. So what is our role? Our role is one. What we have to do after price break this area here like that, now we have to keep monitoring. If the price comes back to this area here in minute 5, we go to minute, in minute 15 we go to minute 1, we look something like this. We have to see that this movement here, what have led to price to come back here, it's supposed to come when it's making the low, making high, making low, making high, making low. Now this area here is this one, Are you getting the point? So this is M15 and this is M1. Are you getting the point? So we have to wait this M1 break this structure here like that, around here. If after breaking that structure, we have to look favorably gap, order block, or insufficiency, that the point which has not mitigated, and then the price will come, take us inside here, and then it goes up, which means this will be a break and a retest strategy. Are you getting the point? But this will help you to enter when you are sure. If you don't see this, leave the market to go. So this can help also to see that if you are waiting the price to come on your killer zone. Are you getting the point? You are waiting the price to come on your killer zone, like here how it did. Let me do like this here a little bit, like here how it did, to see that it comes to our area. The chart doesn't want to move. Now this is our point of interest, where this area here, when the market come back here, which means we have to look for the buy. When we are looking at this, the price has ability of doing what? Of not come and respect this area, has the ability to come and hit this area here down. So if it come and hit area here down and it has not broken this area, it's still valid that the price will come back upward. So what will help us to move with the M1 market structure? So M1 market structure is going to help us to understand that when the price is coming back to our point of interest, is coming, making the lower lows and lower highs. These M1 lower lows and lower highs, they will guide us not to take trades when they are not ready. But when the M1 break this structure, and then we will have a confirmation that now it's time to execute, because now the pullback is over. Are you getting the point? And we take for the buy. So it's the same thing for the sell side. Are you getting the point? So on the sell side, what you have to do when you see something like this, what you always have to do to come and implement the same thing on the sell side. So the price will be moving as like this, you can see. So the market can come and make the high and make low, make high and make low. Are you getting the point? When breaks the high and come and breaks this low here, so it's when we start looking for the sell. Where to get the sell? The sell we can take the sells here. We can tell 6 here in the sells in the middle. We can take the sells around here, or we can take the sells around here. Are you getting the point? Anywhere the price where it will stop is when we will take the sell. Why? Because the price sold us now, it have break this structure, so it's time the price now to start making the lower lows and the lower highs. Are you getting the point? So that we can keep going downward. So the only thing what you have to do after seeing this structure, after seeing that structure, what you have to do is one thing. When the price move high, move low, move high, move low, move high, and then break this structure here. If it breaks this structure, you have to go in minute 1. Are you getting the point? You wait the price to come around this area here. If it comes around this area, here, now here we have break that area, and then the price have to come back at around this area here, this. So it's when you have to go to minute 1. Minute 1, now price can start pulling. If it reach here, now you go to minute 1, you see, or it can reach here, or it can reach here. You see, to make a double tops, to make a head and shoulder, to make anything. So the only thing what I have to do just to read the market, how it moves, high highs and high lows in minute 1. When it breaks the structure, you mark it in minute 1, you wait, it comes back to retest any area inside here, then you execute stop loss above like that, and then you take the market down. Now we have been doing this in TradingView. Let me also take you to MT4, and then I show you what is taking place there and how also you could take the trades of today. Now you can see I have already marked here, but we can come in the daily. This is our line in the daily. Let me do like this. This is our horizontal line. You can come and mark our daily like that. No needing to look the daily bias, whether it is blue or green. No. What you have to do after marking that, come directly to minute 15. Now MT4, it highlights good that in M15 you can see that the day when it was going to when the day it was about to close, it jumped the market and then starts come back upward. We don't care about yesterday, we care up to today price action. You can see that very well when the market was moving, it was doing like this. Let me use arrows here. So you can see very well that the market made a low here, made a high, made a low, made a high, made a low, made a high. We broke this structure. So after breaking this structure, the market come back down to break that structure. So if it breaks that, we start looking now. But by the time this happened, as well, we can confirm that when the structure is broken, all the candles should be up of the wicks. Are you getting the point? Let me put some horizontal or vertical line here like this. So you can see that now if I do like this, you can see very well that this area here, when we made a high, made a low, and then we break above, but here, there, this area here, it was not broken with the full of the candle. So you don't consider this in minute 15. Just this was a sweep up, and then we come down, we break this, we consolidate it a bit, and after we break this area, you can see that we have here a full body candle that closed above. That closed what? That closed above here. If we can do like that very well, you can see that this is a full candle that closed above, which break this structure. So we confirm that now we are still going upward. But when we are still going upward, we can see that we came and we broke this low here. Are you getting the point? So this low down was broken. If we can put a horizontal line like that, you can see that also this low was broken very well. So which means now the price, it does not no longer wants to go up, it is going down. This is the price action what we need. Why? Because the structure is showing us very well. When here the day opens, it moves high, moved low, moved high, moved low. It was an uptrend. So why is it breaking this structure? And when you can see that when here we broke above, we come back and retest. This confirmed that now a support, a resistance became a support. No need to validate this support. Are you getting the point? And when the price validates this support, which means we are no longer going up. Are you getting the point? Now with the change, it have changed. Secondly, I want to show you some tip here. Do you see when we first to break above this, the first swipe, it is upward, and then the following swipe, it is down. This indicates a sell. We first take high, and then we fall to take low. Are you getting the point? Which means the price now it's starting validating these ones. Now it's no longer respecting the lows. We have to go with the price because it has changed now. If it was respecting this, we could wait it break this. When it comes, and then we look for the what? We look for the buy opportunities, and then we go up. But it failed. So after seeing this, we broke downward. Now we start looking for the insufficiency, or to look the order block, or to look the favorable gap. But when you can see at around here, you can see that when this minute 15 it was moving to the downward, we have something like this. If we can see that the price when moved up and then comes back down here, this movement, this candle was filling this, and here we have a huge gap, and then we break this structure. This huge gap left here, by which means the market have to come back and fill it, whether yes or not, it will come and fill that. So we have to mark from this area. We mark it. And we mark this candle. Are you getting the point? So we have to mark two candles. We mark this one and we mark this one. It's weak. So the gap between this area, between this structure and this structure, it is what we call a favorable gap. Sometimes the market will not come to this last selling, that last buying candle as an order block and an order block, but it can take here. It can use this area to be filling and then not mitigate this area and go down. Whenever you see this, no need now to go to minute 5. If you can identify this, no need to go to minute 5. You can put your pending order exactly here, like that. Let me bring the pending order. You put your pending order here, like that. And then your SL to be above of this minute 15, like that. And then you are targeting 1 to 3, 1 to 4, 1 to 5, like that. But if you can look left, you can see that at around this area, the market is when it started coming up. You can use this opportunity to keep monitoring your entries, your TP. Here you can take profit, here you take profit, and here you take your last profit. You can see that the price when moving there, it came very well and hit the last profit. If we are using in this SP500, the first lot size, you can see you are going to lose 0.50 cents, but the profit, you can see here, you can see our profit, the line is moving. You can see our profit that it is $4.30, which means I don't know how many gains is that. We are losing 50 cents, but we are making almost 50 cents. Let us put it to 0.50 cents, like that. So that is how many wins? I don't know. Is it 1 to 10? Maybe 1 to 10. So because if you put here like in $1, that is 1 to 2, $2, 1 to 3, $4, that is 1 to 4, 450, 1 to 5. Are you getting the point? So if I take you to minute 5 to highlights, go simple to be look clear, you can see that the structure movement, the price action in M5 here, in MT5 you can see it moved high, move low, move high, move low, move high, move low, move high. So you can see that the price moving very well. So always you first to start with the minute 15 to get a good clear. If you see the charts are not clean in minute 15, or they are not giving you the good price action, is when you drop down to minute 5. And exactly when you get that, you don't need to scale down to M1. No, you just use that to take the entry. So if you want the confirmation more, if you need the confirmation more, what you have to do, don't use your pending orders. You can wait some the candles to hit your point of interest. You can see it there after the market hitting the point of interest. Here we have some selling momentum candles. You can see that this we have a sell here, we have sell here, we have sell here, we have sell here. Are you getting the point? You can wait also, you do the same thing. What you did here, the market breaks down, come back to point of interest, and then after hitting this point of interest, now you can see when the market starts here and come to your point of interest, where it moves from. Now you don't consider this one, you consider only this one moves which came to touch to your point of interest. Is when you start counting. You see high, we have a low, we have a high, and then we break this low here, which means now after point of interest, the market now changed to start going down. Now we have to look at the insufficiency around here, which means now we will go to the minute 1. What I don't want to do, if we can go to minute 1 and then we look insufficiency here, you will see that all things are aligning with the information what I'm giving you. You can see. So let us do like this to get our pen here very well, and I show you. Now you can see, you see that now after the price hitting to our POI, we had low, we had high, we had low, we had high, we break this structure. Are you getting the point here? After breaking this structure, now we can find two things, the order block and then the favor gap. Are you getting the point? Now here we don't have anything. We don't have anything. The only thing what I can see, we have this here, we have that, and we have this. Are you getting them? We have that and we have that. That is the favor gap what we have. And then because we have hit here, I don't think so that the market will come back here. Now we see we have a drop, we have a base, and then we have a drop. We broke this structure here. After breaking that structure, remember we have a drop, we have a base, we have a drop. So we have two bases. We have this one big base and we have the following base. So this one will become confusing because the M1 is so tricky. That's why I told you, you can now, you see the favor gap or insufficiency, it's above, but the market didn't come back here. But if we could play with only 5 minutes, we didn't miss an entry. But if we can confirm that we want to find to another, you see, but we failed. So let us say that we didn't find the favor gap, and if you have not seen the favor gap around that area, we have to look at the order block. So which means the order block which leads this to be broken, which leads this structure to be broken. The order block is this one here. Let me do like this. The order block which lead this structure to be broken is this one. That is, we have a move, a pullback, and a move. We broke this structure, which means this is our order block in M1, like that. Buy and sell. That is our order block. If we don't get the favor gap, that is our order block. You can see the market came and tapped in and then go down. So if we were taking entry here, you don't need to do like this, that now you are putting your pending order here. That's what you're supposed to do, and then you put your stop loss here. It will be hit. This is M1 and we don't know where it can come up, it can come over, or it will not come back. That's why I'm advising you to stick around with M5. So what we have to do, we have to come back to minute 5 or minute 15. It is the best because that is our role. So we have to find our SL and then it should be above, like that, above this structure what we calculated. Are you getting the point? Do you see? Low, high, low, we break the structure and then we want the price to come back and mitigate the order block and then we drop down. So if we will find there, we don't need to put the SL in the small there. We just got entry there, but the SL should be above this area here, which means we will lose $1. So if we're losing $1, we have to target 1 to 3, that is $3. You can see we are in profit, and then the market went up to 4.6 dollars, but the final target here you can see is 3.91. Yes, that is all. So if I can take for you another pair, let me show you the gold also. The illustration they are going to be the same. You can see this is this horizontal line here. It's our daily. Are you getting the point? Now if you read the structure, now you can see, don't consider this the last ones, you consider these ones where the market is heading. You can see that the market making the low, making high, making low, making high, making low, making high. Are you getting the point? Now the market, if it is doing that, you can see that now we are going down. So if we are going down, what we have to do to go to M5, because this minute 15 is not showing good exactly what we want. Let us go to minute 5. So if we come in minute 5, what do we have here? We start from the day when it opens. We can see that here we had a push up, push down, push up, and then we have a massive push down. We come with when we are what? But gold have its behavior. It has its behavior for respecting these ones, no matter if it is a week. If a week you see a week in the gold, which means that is a breakout. That is the breakout. Are you getting? Gold respect these things so much. So that's why you have to master and understand the every asset that you are trading, its behavior. So do you see that that is a breakout of the above and then the breakout of the low? Are you getting the point? So which means now we have started the daily going up, going down, going up, and then now we break down. If we break down, we have to look the imbalance or the insufficiency. We do like this here, like that, and we do like this. That is our favorite gap. So we put our pending order here to sell and the stop loss above, like that, and then we target. Those are $2, 2, 4, 6, 1, 2, 3. Then we like this, and then I place the pending order down. And now let us watch the market. You see, it didn't mitigate us, but it was, yes, sometimes there will be a sum of miss entries. You have to accept, but do you see what I told you? The market came and then it goes down. Now for the second opportunity, now you can see here, the market break this structure here. Do like this here, we broke this structure. After breaking this structure, now we were expecting to continue going up, but the market came and break the structure again downwards. Are you getting the point? After breaking the structure downwards, now we have to look at the insufficiency. Are you getting the point? Are they here? No, they are not here. If you see, we have some insufficiency here. What we have to do, let me delete the order. What we have to do, like this. There is this here, and there is this here. That So where is going to be our entry? Our entry is going to be here, like that. A pending order, stop loss above, like that. Let us make it $5. We are losing $5. Now, because of this leg, moving from here to here, this leg is going to be our TP. Are you getting the point? So we have to put our pending order here like that. TP is going to be exactly here. We are losing $5, and then we make, bam. We make how many? We make $14, and we came. You see, the market already hit this TP. So the first one we missed this, but this one you didn't miss. You follow the price action. Are you getting the point? You follow the price action. So when to take the loss, if we say that, now you can see that if we come here, let me highlight this area. You see something, and I show you something. You see this area that where the market respected it little bit and comes up. So let us say that we want to do something here, that now the price has break above, and then we have to look for the buy opportunities, because if we can see very well exactly here that the price came and break above. After the price breaking above, when it comes down to this area and order block, you can see that we have here an order block like that. If we don't see insufficiency, we use the order block. Are you getting the point? So you see that now the price have to come back down, and then we take our entry at around that order block. So if you come in minute 1 like that, and we come to our area here, now you see, so we have to monitor now the price. It have come very well and hit to the our order block. When it hits to our order block and then it bypass through it, are you getting them? The market bypassed through our order block, but is this stopping us to take entry? You see, market after breaking this structure here, after breaking our structure here, the market moved up. When it goes up, we wait the market to come to our point of interest, this one. Are you getting the point? But when the market was coming up, making a low, making high, making low, making high, making low, now we were needing to confirm that it's time to go up. The market should break this area, this one. That area should be broken. So if that area get broken, what we have to do, we have to identify this order block, like this here area, like this last selling candle, the order block. Or we see here the favorable gap. If we see the favorable gap, we use this favorable gap like that. Are you getting the point? So what helped us that we didn't take this trade? It's one thing, the previous lower high was not broken to confirm that the change is going to happen. Do you see that the price didn't do what? The price didn't break this area. It respected it. It respected this area. Remember, this is our favorable gap. We are waiting the price to come and tap in, and then we go above after this get broken. But you can see that the price, when it came, making the high, making low, making high, making low, and then comes back, failed to break this area. The moment this area was failed to break, there is no need to take entry here, because we didn't get the price confirmed that now we have moved from the downward, now we are going to upward. Are you getting the point? So those are the things where you always to lose. You always to look in the market before taking buy or sell. Are you getting the point? So we were looking for the buy here, because the price after breaking this structure here now goes up. Now we wait, we found the order block here, our favorable gap, so that the price can come here and reach here, and then we take what? We take a buy. What helps us not to take a buy? It was just the price tells us I'm not ready to go for the buy. period, I'm not ready to go for the buy. This helps us. But if you didn't solve this, you use just candlestick pattern, you see now we have bypassed, whipped. Now we see the price rejections. You know that now we have this, it is hanging man or whatever, what we can call, followed by the bush engulfing pattern here, because this bulls engulfed this, and we see the massive rejection, first rejection and second rejection, and then we engulf this. You can know that now the price is starting to go upward. You can see that the immediate execute here, and then the price moved, failed to break this. They came down, they executed this another time, they added the price pushed for the third time. Are you getting the point? It failed to break, comes back to this order block here, and then they pulled also up, failed. Why? Here it was like accumulation of exchanging orders, so that this really can add fuel to push the market down. But the market told us that here I have failed to break. You see, we had a drop, we had a base, and then we had a drop. I'm getting the point. So this base, this high here, was full of protected. That's why they came for the first, failed, came for the third, failed, cared for the fourth, and then failed. They added a lot of money, and then they protected this high, all money which was here, and then they pushed the market down. Are you getting the point? You see, we have been told that when you see that this support, we have one touch, second touch, third touch, fourth touch, and you can see the price that it's moving, coming closer to it, that is going to break it. Do you see that they lied us? That when the price comes to the structure like this, and you see they come to the close of these triple highs or triple tops, do you see that when the market comes closer, it will always be easy to break it, and it will break it. But here you can see it came very closer to it, it failed to break and moving downwards. So all of the people who were buying here, gone. Are you getting the point? And it's very hard for someone here to sell, because there is no any confirmation that you can make you sell. Why you sell? How can you sell here? You see that we have an order block which is going to go up. Can you sell here? No. But which can show that now here the market is time to go above when we broke this, the recent lower high, because here we had a high, low, here we had a lower low. We had a high low, here we had a low low. Are you getting the point? So this is a strong structure. When the market failed to break it, this tells us if we could be in an entry here, and you see the push, come back, push, come back, push, and then you see this rejection here, you can exactly run away from the market. Either the stop loss was hit. So if you have not understood, go on and hit that comment section, drop anything what you want me to highlight for you more deeply, so that you can understand. I will make another video to see that I explain for you that thing, to see that you get to understand very well. And also, if you have any question that you want to ask me, drop that question in your comment section. Also, I will be ready to answer you guys. And if you have not yet subscribed, go on and hit that subscribe, because the only thing that you can give me to hit that subscribe button. And when you hit that subscribe button, more traders, they will get this information, and we all grow. And go on and hit that like button. When you hit it, the YouTube will get notified that the content what I'm putting you out is helping my fellow traders, and they will push more to more traders, so all of us we can learn. See you to the next video. Peace.